trade deal in the cards? Truth or fiction? Is it done? Will it be done in January? The market didn't seem to care much. We'll see if it holds up. The ECB made a decision this week, as did the Fed. We'll talk about that. There's record central bank gold buying. Repo operations. We've talked about it here in this podcast in the past. I believe this is something that everybody should be keeping an eye on going into 2020. The Fed certainly is. We're going to talk Harvey Weinstein and how if you are a rich male in America, you can rape. You just got to be very rich. And if that's the case and you have the right contacts, rape away. The government shutdown that nobody noticed was going to happen. We'll talk Brexit, Joe Biden, Little Greta, the Trumpster. This is episode 48 of Bizarro World. I am your host, Gerardo Del Real, along with my co-host, the 36-year-old Mr. Nick Hodge. Mr. Hodge, how are you, sir?
I'm doing very well. That's a whole lot to talk about. How are you?
I am well. Also, thank you for asking. That is a whole lot to talk about. Let's get to it. Let's start with the markets. We have what looked like in the morning a deal. This is a lot like Elon Musk when he tweeted funding secured, right? We got the tweet from the Trumpster and he said, huge deal. China just really wanted to make this huge deal. I wanted to make this huge deal. We held hands. We made a huge deal together, right? I'm the greatest deal maker in the world. And then half an hour passed and we got another text, and it basically amounted, as the day progressed, to we just decided to not impose the tariffs that we were going to impose on on December the 15th, which is a couple of days from now, one day after you'll be listening to this. And in return, China said, we'll buy all of the stuff that we need to buy from you anyway. Is that how you read it? Because that's how I took it. And that's certainly how the market took it in its muted reaction, with the Dow up a whopping 3.33 points.
That's how I took it, but I'm going to talk about the pigs, right?
Of course. It all goes back to the pigs. Something that, again, you told us over a year ago. Yes, absolutely.
So back on December 6th, last week, it was said that China was going to waive trade war tariffs for some U.S. soy and pork purchases. We're going to call that the blink. At least I'm going to call that the blink, right? Because we had a stare-off. And it was like, who's going to blink first? And I told you it was going to be the pigs, because China eats a lot of pork and all their pork died. It wasn't that hard of an equation to figure out the solution to. It just took the world a while to get there. And so China reneges on its U.S. pork tariffs because it's got to make its pork dishes. And then here we are a week later, the phase one thing that was supposed to materialize weeks ago is now sort of becoming a deal because I think of the pigs. And so, yeah, I see it the way you see it.
Lipstick on the pig?
Yep, exactly right.
Let me tell you the other thing that I think inspired the deal, and that is the additional operations in the repo market. The New York Fed has now announced additional operations. I don't know if anybody will recall, but about 2 weeks ago, there was an unscheduled, unplanned surprise meeting between the Fed and Donald Trump. And the speculation at the time was that the Fed and Donald Trump were talking about lowering rates for the next Fed meeting. Now, we know from this week's Fed meeting that that was not the case because the Fed held steady, right? It gave itself plenty of wiggle room to lower rates in the future, and it basically committed to what we've been telling you all year long it would commit to, not raising rates for the foreseeable future, not the long-term rates, which it can control pretty effectively. What it cannot control pretty effectively are the short-term rates, and we saw that earlier this year, and we saw it about a month or two ago when overnight rates spiked from 2% to approximately 10% overnight. And that was basically because banks quit trusting banks and said, we're not lending to you overnight at 2%. We're not doing it at 4%. We're not doing it at 7%. 10% is the number if you want overnight money. And so the Fed had to step in and say, kids, play nice. Your balance sheets behind the scenes are probably shit, or you would be willing to lend to each other. Does any of that make sense, Nick? You following me thus far?
I'm following you. You going to keep going?
Absolutely. So the banks are looking at each other. They know what's on those balance sheets, whatever it is. I'm not smart enough to break those down, and I haven't looked, to be perfectly honest with you, because they don't make them available to the little people like me. However, they know what's in there, and that caused the distrust that made rates go from 2 to 10%. The Fed steps in, says kids play nice. Don't worry. Sugar Daddy Jerome will come in, and he's going to take care of you. We're going to go ahead and fund your overnight commitment so that you guys could all play nice. Now, here we are a couple of weeks later, maybe a month later, and all of a sudden we're finding out that there will be at least another $425 billion with a B injected into the market that provides the short-term funding for banks. Now, I will ask a very simple question because I like to think I am a very simple man. If there is not a structural problem within the banks and their balance sheets, why does the Fed feel like it needs to come in and inject another $425 billion? So overnight repo operations now, for those of you keeping track, on December 31st and January the 2nd will rise now to at least $150 billion. Look, it's simple to me. To me, there is a structural problem, and I think it's going to blow up in 2020. You've often asked me before, Nick, what I thought the catalyst for the volatility that I see in 2020 would be, and I've said that it would come from the bond market. I speculated that it would come out of Europe. I still believe that happens, but now we may get a double whammy. We may get a blow up in the short-term rates here in the U.S. because, again, the Fed can control the long-term rates pretty effectively. But we saw what happened in that 2 to 10% spike. It lost control overnight of the short-term rates, and I think that it's something everybody should be paying attention to.
We mentioned it here weeks ago when this started, right? The whole QE, not QE thing. We said not only are they doing the overnight repo market tinkering, they're back to buying treasury bills, et cetera. There's clearly something going on behind the curtain that the Fed is worried about. They're not letting it on publicly. At their meeting this week, they said all is well, no expected rate cuts in 2020. But look, the answer to your rhetorical question is the same as the answer to this rhetorical question. Why is the Fed printing money but buying gold at a record pace? I mean, it's the same answer because they know that something is awry in the financial system and that there's going to have to be some sort of reset, whether you want to look at the federal debt or the consumer debt or the global unfunded obligations, whatever that number is, the M1 money supply. I mean, there is going to be a reckoning, and pick your expert, James Steins, Jim Rickards. This is the stuff that they've been preaching about for years. And here it is starting to play out in real time. And just one caveat, I think for myself, but hopefully it helps other people as well. We spend a lot of time preparing and talking about this, and this is sort of the curse of the newsletter writer as well. It's we're always early, right? We look at these tea leaves all the time, and we read all the headlines, and we the Wall Street Journal, the Financial Times, Bloomberg, we're on it, we're glued to it, and so it's probably been a month since we talked about this overnight rate stuff, and we probably said it was going to be exacerbated at the time and get worse at the time. And here it is a month later, and it's almost a non-news event because we had expected it and it's baked into our own cake. But that's a mistake, I think, because this is when it's time to act, right? It's like, for the past 3 weeks, we were almost depressed about the action of junior miners. And here we are, a week later, and juniors are now showing a bit of life, catching a bid for both macro and micro reasons. And so the lesson that I've learned is stay excited, right? Stay in the moment. Like when something materializes that you've been expecting, stay with it. Don't dismiss it. And I'm personally guilty of that. And so I guess it's a bit of a confession, but like I almost dismiss it. Like, yeah, I knew that was going to happen. You know what? I don't know if I'm making sense.
No,
I knew that was going to happen. I don't have to pay attention, but you do have to pay attention because now what you thought was going to happen is actually happening. And so you have to take real world actions in the market.
Absolutely. No, I couldn't agree more. And just as a reference point and some context, the Fed began conducting its own operations on September the 17th. I think if you go back and you listen to the podcast the week after September 17th or the week after that, you'll likely hear us talking about it and explaining to everybody what we thought would happen and that all was not well behind the curtain. So it didn't take the Bank for International Settlements, which acts as it's a consortium for global central banks, issuing a report, which they did this week, saying that the September issues could rise again. It didn't take them for us to connect those dots. It didn't take the New York Fed trading desk alumnus and now Credit Suisse analyst who said, and I'll put the link up, and this gentleman did an extensive analysis. It was really well written earlier this week, saying the central bank may have to gear up for a fourth round of QE, large-scale asset purchases, or face serious market issues before the end of the year. Is what this gentleman said. So again, it didn't take either of those groups or institutions for us to connect those dots. It just took an extra couple of months to play out. Just like, and we're going to toot our own horn a little bit here, just like it didn't take Mr. Nick Hodge, to get something out of China in writing for him to know that what was going on with the pigs was a big fucking deal, right? You said this over a year ago, and now it's having some real life ramifications. So why does this matter to anybody that's listening that speculates in the precious metals market? Well, again, Nick already answered that question. The reason that gold has been resilient, the reason it closed at $14.75 today, the reason central banks are buying record amounts is because they are privy to the information that the average little me and Nick and the average Joe aren't privy to. They know behind the scenes there is a structural fracture that I think is about to break. And this plays out one of two ways. This is where you make money off of it. Either the Fed gets control of this through continued purchases and intervention, which they opened themselves up to in their statement. They said they haven't been able to stoke the inflation they wanted to, but they're going to continue to work at it. Don't expect higher rates anytime soon. And they leave the window open to go ahead and lower rates. And then they added that they also were, monitoring this repo situation, and they were willing to take additional measures as, quote, needed to quell the repo issues. That's all you need to know. That's all you need to know. When everybody thought that the Fed was going to continue to raise rates and we told you that wasn't going to happen because math wouldn't allow it to happen, I'm now telling you, and we are now telling you, that the Fed will have to take additional measures to quell the repo issues. It's not going to go away on its own. So that's good for precious metals. Coming off of another tough tax loss selling season, coming out of one of the most brutal bear markets in the resource space, that means the Q1 rebound in the better juniors and in the gold price is very likely and likely to be robust. So make your Christmas list, folks, and start adding to those positions if you haven't already done so this week, because I think the buying opportunity, I issued a note on Midas Gold to subscribers earlier this week, and I said the prices that you're seeing in Midas Gold shares are likely the last opportunity you'll have to purchase it at these prices, because I think 2020 is going to be historic, full of fireworks, volatility, higher gold prices, and much higher prices for companies that are busy exploring, discovering, and getting revalued if they have assets in the ground. I know that was a lot, but I think it's important.
I bought some more Midas Gold this week, and I had a good conversation with Stephen Quinn. They are really coming into the final stretch of permitting for that Stibnite gold project that's almost 7 million ounces in Idaho, and it could dovetail nicely with this new gold bull market that is developing and materializing. So, they'll have their comment period here starting in January, and then a draft record of decision next year. So really by late 2020, early 2021, Midas could be off to the races. And that's just the fundamentals. It also is particularly susceptible to tax law swings for the past couple of years. And I don't think it'll be any different this year. So certainly a name to look at this point in time. And now I'm going to tell a little kind of funny story joke. You're talking about pulling back the curtain and how obvious it is to see, et cetera, et cetera. So my girls, they watch, kids YouTube, and often it's some of the same songs over and over and over, and
No way.
including Baby Shark for like the past 3 years. Everybody knows Baby Shark at this point, right? Mm-hmm. Well, we've known it for 3 years, but anyway, one of the other very viral toddler jams is called Johnny Johnny, and it goes like this. Johnny, it's a kid, it's a dad talking to his son, and the son's name is Johnny. So he goes, Johnny, 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 yes, Papa. Eating sugar? No, Papa. Telling lies? No, Papa. Open your mouth. Ha, ha, ha. And it's like this. It's like, Jerome. Yes, everyone? Raising rates? No, Jerome. Open your curtain. Ha, ha, ha. Like, we all know what you're doing, Jerome. You can't hide sugar like a 3-year-old. It's the same thing.
It's where we're at, folks. And you know, we talk about the fourth turning often on this podcast. The great book that, you know, studies history and cycles and, you know, proposes that these things tend to repeat themselves. And anyway, you can go look at the book. You should read the book. It's a great book. I think it has a lot of value in today's times. And I think a lot of what is, outlined in that book is going to come to pass. And, you know, one of the themes that we have really, I think, pounded the table on is how the lack of faith in government is going to intensify the volatility, both socially and economically and financially here in the coming. This won't be a 1 or 2 year problem, folks. This will be the coming decade. And, you know, we're seeing it. And again, this really didn't get the press that I thought it deserved. The British elections, right? We just seen the Labour Party get trounced, you know, and the Labour Party, for those that aren't familiar, is the equivalent to the extreme left in the Democratic Party. And so, you know, they basically got told to kick rocks. They basically were told that, listen, we want to leave the thing. We don't want to be tied to the euro. We don't want to be tied to the rest of Europe. It doesn't make sense. People are fed up. It's the same promises from politicians. They never materialize. You know, they promise to tax the rich. They never lower taxes, whether they tax the rich or not. And it's just politicians lining their pockets, right? And so, good for the citizenry for taking a stand. And it hasn't gone unnoticed. I read an article today. I'll put a link up. Joe Biden, you know, he's warning. He's saying Democrats need to see the Labour Party's electoral defeat as hard proof that left policies are doomed. Now, I'll say this. In the short term, I believe that's the case. In the short term, I do believe that just running on a platform of taxing billionaires and making rich people seem like they're horrible, and it's just rich people that are horrible, is not going to move the needle for getting a left-leaning president. It's not going to happen, folks. So Joe Biden is right in the short term. Where I think he is short-sighted, no pun intended, is that I think in the long term, and I don't think it's the left, I think it'll be, you know, a third party or a hybrid of both parties that will come, you know, to the presidency in the next election cycle. Not this one coming up. I think Trump wins. But, you know, I think in the long term, it's that centrist, libertarian, smaller government, smaller taxes, more privacy. I think those are the themes that are going to win out. And some of those policies will come from what right now is considered the extreme left, the young part of that party, right? The AOCs of the world. I also think you're going to see young Republicans with some ideas that'll piss off the Republican Party the same way AOC pisses off at least half of the Democratic Party, right? I think in the future, there is going to be an opportunity where both parties are meeting in the middle and actually governing again, because these fuckers right now that are in office sure in the hell are not doing it. And I think people are fed up. I think, and I know I'm ranting a little bit, but again, it's all tied together. I don't know. Did you catch the Donald Trump and Greta little spat earlier on Twitter? The Greta Thunberg, the Time Person of the Year, that was just elected for her views on climate change and then her work on, you know, the environment and wanting to get young people involved to undo all of the wrongs that the old politicians have you know, done.
She's not a cobalt miner yet?
Yet.
I caught it.
It was hilarious, right? It was like, it was classic, like generational Twitter beef, right? Donald Trump goes after this young lady. She's 16 years old. She's a teen, man. Using her time for good, right? In her mind, she's bringing attention to an issue that's important. And whether you agree on the new Green Deal or whatever the heck your opinion is, we should be encouraged that young people are getting out there and learning and getting involved and evolving, right? She's 16. So Donald Trump, in his infinite wisdom, comes out and tweets, "So ridiculous. Greta must work on her anger management problem, then go to a good old-fashioned movie with a friend. Chill, Greta, chill." And she changes her status to a teenager working on her anger management problem, currently chilling and watching a good old-fashioned movie with a friend, right? It's kind of that okay boomer response to the old guy who really doesn't get it and thinks he's more important than he is, except that old guy happens to be the president of the free world right now, right? That's the future, folks. That's a fourth turning type of thing. The young people of the world that are coming up and looking at the fuckery that has gone on in the world aren't standing for it. And it will change. And before that, there's going to be a lot of volatility and some violence, I imagine. Not the way that the right is calling for it. We're not going to have another civil war. Motherfuckers aren't that brave nowadays. But, there will be some violence. There will be some issues, and that's just part of the course, right? Anyway, I just wanted to touch on that. I had a conversation with my friend, Mr. Dave Gallagher, which is what we're going to title this podcast. We talked yesterday, and he comes in, and Dave's a great guy and a great friend, and he comes in and he goes, "Man, you believe that shit?" And little Greta, the Time Person of the Year. You have protesters in Hong Kong and all these great people, these doctors saving lives, and this little Greta chick is the Time Person of the Year. Couldn't they find a better person? And I said, look, if you're going to look at individual accomplishments, sure, you can make a good argument for 100 people. There's probably people in my neighborhood that have, achieved more tangible results when it comes to everyday applicable career things, doctors and, great people of the world that do great things. But the point in her getting that honor, I thought, was an indication of it's the youth. She's leading that charge. The youth is going to lead the charge that changes the future for the future direction of the planet, which obviously is not going in the right direction right now in many, 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 many segments. So, and he wasn't hearing anyway. He's like, yeah, whatever. I think it's bullshit. So, Dave, this episode's for you. That's all I got, Nick. That's it. What do you got?
Oh, a lot of stuff on that. So I'll start at the beginning. One, the UK, we just have fatigue, right? The Brexit thing has been going on for so long and is so complex and has been voted on in so many ways by the people and then inside government that I think people just sort of lost track, sort of like the impeachment thing that's been going on in the United States, although that's been on a bit shorter of a timetable. I think people kind of got fatigued with the impeachment until we got closer to a vote this week. And so I think that's why people don't pay as close of attention to Britain. And I think it's sort of fallen out of the headlines a bit, right? Because Absolutely. It gives people ideas. The same with you mentioned Hong Kong. That's gone from the headlines.
Yep.
I don't even read about the yellow vest protest in France anymore, and shit is getting real over there. I was talking to a buddy today who was supposed to go to Paris for Christmas, and they can't go because there's a massive transportation strike.
Yep.
And so that I didn't read about that anywhere all week, and maybe I didn't have a lot of time to read news, but normally I come across at least the big issues of the week. I didn't see that anywhere, and so that addresses the first part of the thing you talked about. And then sure, let's talk about the fourth turning, where a party rises to power that has new ideals. That's what you were talking about as far as some combination of the left and right getting elected. Certainly it's not Trump that is the one that's going to rise from the ashes.
He's the chosen one. God has come down. I mean, everybody says it. The smartest people, the best people.
The best. Yeah. So I've heard. But no, certainly Trump ain't it, right? And I identified sort of Buttigieg early as the one who wasn't attacking the rich and was sort of had a midline bent. And had military service, which the conservatives like. And lo and behold, look who's polling ahead of Biden and Warren and Sanders. And so, yes, you're very right that there is going to be some new political ideals that come up. I couldn't tell you what the party is going to be called. I couldn't tell you if it's going to be some Democrats and some Republicans. I don't know if libertarians are going to come to the fore. But what it's going to be, it's sort of like Jerome raising rates, right? It's sort of like everybody is socially liberal and fiscal conservative, and nobody wants to admit that we all live in the middle. And so, yeah, it's like the most complex issue, and it's also the most simplest issue. And it's like Occam's razor, right? Like the best solution is going to be the simplest. And if the most people are socially liberal and fiscally conservative, then maybe we should get back to doing that instead of playing everybody's politics partisanly.
Agreed. And speaking of fiscally conservative, did you realize that the government was on the verge of almost shutting down again? Probably because you read, but most people didn't.
I actually didn't, not until it was averted.
And how is it averted, Mr. Hodge? I know you know the answer to this question because this is the one thing that both parties can always agree on. Again, the reason why I think Little Miss Greta is Time Person of the Year, because she's like, you dumb fucking politicians, all you do is take money, put it in your pocket, and we're tired of it. We're going to do something different. Don't know what it is yet, but it's going to be different. I think that's why she's that person. But what is the one thing that both parties can always hold hands on, Nick?
Well, money. What are you going to tell me?
That's it. Spending money. Spending money. It's it's another 1.3 trillion. That includes all 12 spending bills, and it came after a day of last minute negotiations. Come on, and they expect people to buy this stuff. All the spending bills passed. Every spending bill proposed by each side got unanimous approval. And it was only last minute negotiations. These people don't care about you, folks. I see people upset that Michelle Obama said something nice about George Bush, the way many of us were like, upset at Ellen because she said something nice about, George Bush as well, and said, we can find common ground and all that. And the only reason it didn't rile me up is because I don't believe any of these people. It's all behind the scenes. They're drinking champagne. They're having the best wine. They're working out next to each other at the best resorts. They don't care about most of us, everybody. And until we start voting our interest and quit voting for the most entertaining politician on the stage, it's not going to change. Which brings me to one more point. I know I got a lot to talk about today, but the mind is going. Did you see President Trump said he might just skip the general election debates and not debate at all?
I actually have not seen this. So when was that, today?
Yes. He said he's considering just skipping the debates altogether. They can debate themselves.
I mean, he's going to wait and see. That's all. He's playing chess, right? I mean, he's got to wait and see who the candidate is. He's just saying that. He's doing that to discredit the process in case he does have to bail out if it's someone he doesn't want to debate. But I think he'll cross that bridge once he sees who the nominee is.
We'll see. Yeah, I thought it was
because the debates did in favors. I mean, the first time around, right? You remember Tiny Hands Rubio and the water and drinking the water too much and all that stuff. I mean, that's where that was his bread and butter.
A lot has happened since then, though.
Sure.
A lot has happened since then. I mean, we're trying to, yeah, there's a lot. We can continue going. One thing I failed to mention is copper's positive reaction to the trade deal. And we talked about it last week, and that move continued this week. It closed today at 277. If we look at a 6-month chart, we're at 6-month highs. And yeah, if this can continue and a trade deal is actually signed in January, which again, it's a very big if. We're on record saying we think it's lipstick on a pig, and it's much to do about nothing thus far. I know they mentioned that U.S.-China Phase 2 negotiations would start immediately and would not be pushed off until after the new year. But I sure hope if there is an agreement, a Phase 2 agreement, and Phase 1 is signed off on, that it's more meaningful than the stuff that we got today. And if it is, then, copper back at $3 a pound makes a lot of these copper juniors and the majors, frankly, a lot more attractive within that context, especially if you can pick some quality names. Any thoughts on that, Nick?
Just a couple. One, we know the reason that copper has to go up. I think we touched on it last week with the electrification of everything, and copper is the one singular backbone for all of that. So that's like the core macro fundamental reason. And then We had talked about how it's sort of like an indicator of the economy, and the fact that it was going up meant that things might not be as bad as they seemed. And then we actually talked about how millennials could be staving off a recession. And now I have to jump back to our last discussion because I missed one point I wanted to make. And I also talked about last week how millennials are coming of age later. They're waiting basically a decade from the predecessing the previous generations to have kids, to mature, to buy houses, et cetera. And so that's also why you haven't got the millennial presidential candidate yet, right? Buttigieg is close, but really you're going to have millions and tens of millions more millennials that have come of age by 2024. And so that's why it's going to be 2024. Back to copper now. So the fundamental reason is the electrification of everything. And so I was Googling this week copper prices for a couple of reasons. One, I needed some charts, but two, I wanted to see what was being written about why copper was going up, because there's always different takes, right? And so just in the first page of Google News results, there's all these different reasons that copper is at 6-month highs, depending on who you want to click. If you want to click on Reuters, Reuters will tell you that it's at a 6-month high because producers are hedging. But if you click on, if you click on the Economic Times, they'll tell you that it's at 6-month highs because of strong demand. If you click on yet someone else, they'll tell you that copper is rising because of the reason you mentioned, the easing of talks surrounding the trade deals. But I just was scrolling, and I found one that I thought made the most sense, and that was, and I didn't know this, China's imports of copper have risen to the highest they've been
7-month highs.
Even more than that. This article says the highest copper imports to China since September 2018. Shipments totaled 483,000 metric tons in November, 6% higher than the same month last year. So there it is, back to China again. And if you have a voracious appetite for pork and copper, you're going to have to start playing nice.
Agreed. And here's where China is at a distinct advantage, where we have government that can't agree on anything other than spending, and they don't do that well because we still have yet here in the U.S. to pass a meaningful infrastructure bill. And if anybody has traveled this country recently, you know that this country is in desperate need of some revamped infrastructure. China's distinct advantage, you could think however you think or feel about China's government, but they are nimble, they are quick, and you know they are able to fund infrastructure packages by selling bonds that they allocate to just infrastructure, where here in the U.S. we can't agree on even that, right? So whether it's the electrification of everything, which is very real, electric vehicles and solar generation, everything that goes into that, right? Or you believe that there's a desperate need for global infrastructure, which I wrote about 2 years ago, and it's still yet to materialize. It will, because it has to. All of those things are true. Whatever your reason is, supply disruptions, lower grade, less discoveries. The point is, pick your reason or pick them all. They're all true. And so to me, look, whether copper pulls back in the next 3 months or not, I know in 5 years, I am going to wake up to a significantly higher copper price. And so there's ways to make money, obviously, depending on your risk tolerance, around that premise. And again, much like precious metals, there is a robust argument to be made for substantial copper exposure going into 2020.
We talked about Cucho last week. I recommended it yesterday. You got to find quality assets that are going to be buy-ins in the next cycle. That's how this works.
There you go. Quick question for you, Nick.
Yep.
How much do you think it costs to rape in America?
Oh gosh, I know the answer, and I also know that insurance will pay for it.
Oh, these motherfuckers! Oh, and this one fucking ticks me. I'm gonna let you talk about it because this one really upsets me. There's a few types of people that really get under my skin. Sex offenders are right at the top of that list. Rapist, Harvey Weinstein. He's not an alleged rapist. He's a rapist. And so I'll let you go ahead and break it down because you know exactly what I'm talking about. And I'll fill in blanks if I have to.
Yeah, obviously you've probably read more than I have because it resonates with you clearly. But what I read is that um, Mr. Weinstein has reached a tentative deal with his accusers to basically pay them $25 million. And he had insurance companies that covered his firm that will um, basically pay that payout. And so it doesn't come out of his pocket. He's also, I believe, awaiting trial in the comfort of his own domicile. I think he has to wear an ankle bracelet, and I think he had to pay a bit more money this week, or there was some more stricter terms put on his being free because he was tinkering with his ankle bracelet. But yeah, that really sort of two thoughts, and then I'll let you go. Uh, One, I didn't know when this became a money issue, and I guess everything is always about money, but I'm not sure that really fixes anything. And two would be, especially if the accuser doesn't have to dig into his own account to pay for it. If it's the equivalent of the insurance paying for it, then what really is the lesson learned? And I guess maybe there is a three. Like, where do you get an insurance policy that will pay your sexual rape payouts for you? Like, how does that work?
So many thoughts. One, that should be criminal. Two, the insurance company that was willing to pay out should get Me Too, times up, whatever the heck you want to call it, to no end, so that in the future, insurance companies do not step to the front of something like this, a deal like this. So let me add a couple of specifics. You mentioned the $25 million that the accusers would split. This isn't two accusers splitting $25 million, right? And let's be clear, there is no price tag on being raped. This is dozens of women that have accused him of sexual misconduct. Now, whether you believe that he's guilty in every case, it really doesn't matter in this point. The insurance company obviously thought that giving a total of $25 million that they could all split, less than $1 million a person, was the right thing to do. It's coming out of pocket of the insurance company. Yes, his bail was increased because he was tampering with his ankle monitor. This fucking guy comes in with a walker, and he's walking in and he's got issues and he's wearing a diaper and whatever the hell else he was doing to try to gain sympathy from the judge. And then after it's all said and done, and then the bail was increased and he had to pay that, and I'm sure the insurance company probably helped with that as well. He's seen without his walker later on because it's all a show, it's all a gimmick, right? And so yeah, it's that's what it costs to rape in America. Less than $1 million a piece. If you got the right lawyers and you got the right insurance companies, you don't even have to pay for it.
Drinking the same wine with those politicians, huh, Gerardo?
That's it. You better believe it. You better believe it, folks. And then people wonder why little Greta's so upset about the shit that, like, structurally the world has given us, right? It's an absolute mess, man. It's an absolute mess. It's a bizarro world out there. I got a joke for you.
I have an answer.
Ring, ring.
Who's there, bitch? It's big data. Let me tell you a story.
Fire away, Nick.
So I wanted to talk about.
We don't plan this stuff, folks, by the way. Yeah, we were going to talk about ring, ring, but we didn't plan on a joke or whatever. It just kind of comes out. But fire away.
So I wanted to talk about this for a while, and I've probably touched on it here and there, but this whole big data thing, like, we know we're Facebook's product and we know we're Twitter's product, and they're using our data to sell us things and serve us advertisements, but it's all getting tied together very fast. And now we're incorporating like sensors and cameras into it. So let me start with a story about a murder. I was reading in Wired magazine the story about this murder that cops were having trouble solving, and they ultimately pinned it on this like 93-year-old dude. And it was hard to figure that out without the stuff I'm going to tell you in a second, because who would think this old 93-year-old frail, the dude was like 5'0" could commit murder? And they ended up using two things. One, they used Ring, the doorbells, the Amazon doorbells, the company that I think Amazon bought, could have been Google anyway. they got camera footage from neighbors in the neighborhood that had Ring doorbells, and they were able to piece together car movements from the victim's driveway, right, from other people's cameras from multiple angles, right? So they're taking all these inputs and they're able to put together what happened visually. And then also, the victim was wearing a Fitbit. And so they were able to use the Fitbit data because it monitors your heart to know like when the struggle went down and when exactly she was deceased. And then they were able to piece that timeline data together with the visual data from the coming and going of the cars. You seeing where I'm going?
Absolutely.
So, this can work in your favor if you're a victim, and certainly work not in your favor if you're a criminal. But the point here is that we're giving up even more privacy, which is not a good thing. And it's something that you and I have talked and written about for a long time, especially as it relates to financial privacy, right? Using cash and having precious metals and not going to a cashless society where governments and insurance companies and corporations know what you're doing with every single cent. Well, now they're almost at the point where they can know what you're doing throughout your day, right? With geolocation from your G Maps or your Apple Maps, and by following your car via stitching together visual things from Ring, knowing when you're having sex from the Fitbit data or the Apple Watch data monitoring your heart, or when you're working out. And so these journalists, and that's
can you tell the difference? Sorry.
I don't know yet. I have to read into that. It's funny. Hopefully you're, no, never mind.
Sorry, the mind went there, Nick. Apologies for cutting in.
No, that's all right. So there's this article that I'll post a link to about how these journalists were able to go into this Ring camera data and piece together everything that was going on in this neighborhood. And you can bet your bottom dollar that governments and corporations are doing that as well, because there was another story that broke this week that I don't want to talk about yet because I haven't had enough time to digest it, about more information out now about how the FBI uses spying tools and abuses them, and how the media helps them. There was a big story that broke on that this week that, of course, didn't, make big waves because I guess there's other important things going on. But we're there when it comes to this technology and how much it knows about us. And if you want to bring it back to a real sort of esoteric or philosophical thing, I'd have to invoke sort of like religion and God here, because it seems almost as if that's what humans are hell-bent on creating, is some form of all-seeing eye, and we're doing it to ourselves, right? And it's something that's worth certainly taking note of and being aware of, and making conscious decisions are as far as the technologies you use, what you allow into your home or on the periphery of your home, and being conscious of how your data is used and tracked. But this Ring article, man, it's pretty crazy stuff.
Very, very scary. There's an old saying by an old wise man that says, it's usually not the lack of something that kills people in old age. It's the excess that kills people in old age, right? Whether it's too many drugs, too much alcohol, too much food, the wrong kind of food, it's excess typically that does it to older people. And we as human beings and as a society should be very, very careful with the development of a lot of this, because yes, there is a lot of good to be had from technology and its application for the right things, right? Medicinal breakthroughs, all sorts of things. In this case, this gentleman that was a killer was caught, at 93, but they got him. They probably otherwise would not have. But that cuts a lot of different ways, right? And so I'm not smart enough to provide solutions or answers, but it's amazing to me that we don't really have a pronounced legal framework or even an ethical framework, really, for a lot of this, right? We're just kind of making it up as we go, and it's corporations that are calling the shots. and making the rules and deciding what to do and how to develop, what to do with all the information, how to develop the next gadget, trinket, product that's going to get more information in the database, right? And we know this as you and I co-own Resource Stock Digest, we co-own Small Cap Stock Digest, we just launched a publishing company together. We know the value of data, right? The more information we have, the more we can fine tune the products that we want to sell and the advice that we want to provide. And so we know that on a very small scale how important that information is. But the stuff that companies like Google are collecting, it's scary to me. It's scary to me. And again, back to little Greta, I hope that generation realizes the excesses that could come as a result, because I don't believe the generation that's in power now gets it.
It's the same reason that people, wealthy people and wealthy families for generations have owned precious metals for financial privacy and to avoid the prying eyes of government. And that's the same reason that you need to be protective of your data and what you do online and the inputs you put into these devices. And, Van Simmons will talk on this for a while. You interviewed him. He's the main part of the December issue of Hard Asset Digest. And that's kind of another thing that got me thinking about this. I was reading the issue that'll be out soon, and he's talking about clients he has, rich clients in France, for example. This is how they hand wealth down from generation to generation, right? From father to son, from mother to daughter. It's not in 401ks and IRAs that the government knows about that are taxed. It's in crates of precious metals that the government doesn't even know exists. And it's because privacy has a value, whether it's with what you're doing with your dollars or where you're driving your car or what you're doing in your free time. Privacy is a crucial part of freedom. And if you give up the former, you don't have the latter. And we really need to be mindful of it.
I'm looking forward to that issue. I'm not exaggerating when I say when it comes to privacy and collectibles and hard assets, Van Simmons is an absolute national treasure of information and access. And that's not an exaggeration, folks. When I tell you that this is a gentleman who meets with the families that own entire neighborhoods in Manhattan, that's not an exaggeration. I know you have a couple of stories, Nick, that speak to how well connected and how sought after he is. And there's a reason for that, right? Yeah, I'm looking forward to reading that issue. It should be insightful as always.
We will have it out by the end of the year.
Excellent. I want to come back to my Harvey Weinstein thing because I left out the one thing that really set me off. The insurance that's paying the $25 million and negotiated the deal. This is the part that really got me, is it includes a clause that says there will be no admission of guilt. That's the part that's just take this to the face.
Well, that's always what it is. I'll take it back to the banks, right? Whenever they get caught doing something, manipulating LIBOR or laundering money for terrorists or manipulating precious metals prices, they get to do the same thing. That's the privileged way. You get to make $1 billion, pay $100 million fine to the government, your speeding ticket, keep 90% of your ill-gotten gains and move on with your life without admitting that you ever did anything wrong. That's always it, right? I've written about this as well. It's always like a snafu, or it's a mishap, or it's a fat-fingered trade, or it's always some like little catchy phrase other than like fraud or breaks the law. Like it never just like says what really happened. It's always the bank snafu allows rates to be manipulated globally. It's like, come on. But no, they never have to admit guilt, and they always find a way to get that in the paperwork and the legalese so that they're protected in the future, right?
And in the case of repo operations, back to the Fed, we're going to throw another $500 billion, almost $500 billion, right? $425 billion into the system. And we don't really know if anything's wrong, wink, wink, but just in case, we're going to throw $500 billion into the system and make sure it doesn't keel over. If you think there's not something structurally wrong, folks, you're in for a heck of a 2020. Act accordingly, everybody. Nick, we haven't done a stock of the week in a couple of weeks, though we have highlighted some stocks. We highlighted Cucho Copper last week. It had a good week. Copper had a good week. Not a coincidence there. There's whispers of a potential offer for that company. These aren't new whispers. It's a great asset. It's a good management team. And it's very undervalued, to say the least. I couldn't help but notice a couple of the better lithium names had a decent week. One company that did not have a great week that I think is underperforming is Advantage Lithium. It has been a painful trip. This trip started in the 30-40 cent range. It got as high as $1.30, $1.40, if I recall correctly. And unfortunately, it's been a round trip. I wrote a piece last week or the week before calling for a lithium bottom. It really relied on a lot of information from Simon Moores and the Benchmark Minerals people who do an incredible job at compiling data on the critical metals. But yeah, Advantage Lithium, I think, between tax loss selling and coming out of a lithium, a couple of tough years in the lithium market, I think Advantage Lithium is a heck of a speculation. Do you have any names that you want to highlight that could present a tax loss selling opportunity and potentially, a profitable trade or speculation for 2020?
I've already mentioned it, and so it's broken record time. But not only is it a good tax loss candidate, but I literally purchased some this week, and so there's no stronger recommendation I can give than that. And it's Midas Gold. I added to my holdings this week. I put out a new short-term trade on it in my letter, sort of trading around our core long-term position for the reasons that I said earlier. It's been tried and true tax loss rebound candidate for the past 3 years, and it's something that I wouldn't mind holding past that time frame. And so it's a no-brainer for me to buy a little bit more Midas, wait into the new year, and then reevaluate that separate position that I initiated. And I'm going to bring it back to 3 months ago now. You remember I told you I had sold a chunk of my IRA back in, it was probably June or July when things got a bit volatile, and I was just leaving that chunk on the side. I put it back to work this week, but I didn't put it back to work in the Vanguard 500 or in dividend appreciation fund. I went into the and Vanguard doesn't have a precious metals fund. This is probably a topic for another podcast, but Vanguard got rid of their precious metals
absolutely
last fall.
We talked about it. We said it was a sign of a bottom, and it wasn't. We were a year early, but we talked about it.
Well, here we are coming back a year later, and I was like, I think some of these, obviously the majors are doing well. They're having better earnings reports, and they're expected to do well into the new year. Gold held at the end of November, and so I was like, let me see if I can throw that money into a precious metals fund for a couple of months. And I couldn't, but what they did is they have another fund. It's called, and you'll love this, it's called the Cycles Fund, right? And the Cycles Fund, guess what they're holding in the Cycles Fund?
Precious metals.
The gold. They certainly are. And so I redeployed that capital into not Vanguard's Precious Metals Fund, but their Cycles Fund, which they do not advertise, but does in fact hold precious metals for the cycle that we are currently in.
Yeah. What was that Shakespeare line? A rose by any other name is still a rose, right? One more thing to add on your Midas highlight there. I couldn't help but notice that the CEO of Barrick earlier this week came out and said that, quote, "We've definitely got the firepower to build a mine or to support a transaction. We don't need any external support for any of our ambitions as we stand today." So obviously highlighting the fact that it is looking for large scale assets. Good jurisdictions obviously have become a factor of increasing importance. And again, I think Midas Gold, I know Midas Gold checks all of those boxes. Heck of a speculation, if you ask me. And I couldn't agree with you more, Nick.
Well, Barrick is doing exactly what it said it was going to do, shedding what it considers not to be tier one assets. And You know, I struggle to do it sometimes, but I'm going to pound the chest a little bit. I've been talking about Teranga. No
You
one
killed it
ever,
with Teranga.
no
Kudos to
one
you, sir.
ever.
Nobody gave a fuck about your Teranga recommendation. You've said it over and over for months on end. I've looked at it. I couldn't get past the jurisdictional risks that I thought existed. There were a couple of other little things. I didn't believe it, and boy, was I wrong, and boy, were you right. So you pound that chest.
So Teranga has now taken what one asset that Barrick considers to be non-core. It's called Massawa. It's in Senegal, fairly next door to the current flagship mine that Teranga has called Sabodala. They can incorporate it into the existing infrastructure. Analysts are all over this deal. Teranga, we're in at, gosh, I think just around $3. It's well over $6. Analysts on average are targeting shares over $9.50. And so Teranga, y'all.
If you look at a 1-year chart of Teranga, everybody, it's what you hope your Fitbit would pick up if you were having sex right before you passed away. So look at a 1-year chart of Teranga, everybody, and aim for perfection.
Oh, well, that's, one bright spot in the sky.
That's all I got, everybody. Episode 48 of Bizarro World. I am your host, Gerardo Del Real. Be kind, be nice, have fun. Nick, send us off.
Oh, blind squirrels and nuts. I'll see you guys later.
Bye, y'all.